Assalamu Alaikum everyone, welcome back to the channel. I hope you're having a great day. In today's video I'm gonna share with you a very small cap company, a really small company that I have been researching about in the last few weeks. I came across this company not long ago. I was really interested because what I was looking for, if you've been following my channel, you will know I have been investing in companies that are blue chip companies that have been around for a long time. Majority of them do pay dividends, and in terms of growth wise, obviously they're still growing whatever, but there's none in here that probably will grow 20, 30, 40%. Having said that, companies like Qualcomm, which I did a video not long ago, has actually got that potential. But there are a few old companies here as well. So you got like Rio Tinto, that's not going to grow 20, 30, 40, 50% unless the iron ore is like basically in demand or whatever. So I've been looking for small cap companies that I can add to my portfolio. Recently I found the HP, but then obviously there was a situation with HP I didn't know about, the fact that they were supporting the the Israeli government and all that stuff, and I'm so grateful for the community. One of the brothers mentioned that, did a little bit of research to make sure that it was the case, and alhamdulillah I found out it was the truth. And it was only I started buying HP not long ago anyway, so I got rid of it, and now I'm been looking for a company that's small enough obviously that I can add to my portfolio. And I came across this company called Medifast. The company basically sells weight loss, health related products, okay, through their website, multi-level marketing, telemarketing and franchise weight loss clinics. Not only do they sell products, they also have they sell a lot for products, but they also have coaches as well. So they sell the products and they have a coach that you can actually talk to and help you, and they have clinics that you can go to. It's really exciting little company. But anytime I see food companies, I'm always a bit skeptical about it because I'm not sure whether they're Sharia compliant or not. So I looked up on Zoya and Islamically. So I can share with you Islamically because Zoya is only an app, so I can't share that with you. But they both are basically, they're both saying is the Sharia compliant. So from business perspective, from debt, from cash, from receivables, all of it basically according to Islamically is actually a Sharia compliant company. And when you look at it a little bit more, you can see the compliant risk, okay, is basically a way into basically right bang on in the green section. So that is the company that we're going to look at today. The other thing I've noticed is the company has actually grown so fast in the last few basically the last 2 years, but the last 5 days, just this month, company is actually down 17.5%. And I was wondering why that is, but there's no news on it. But then what I've realized is because of the hype, everyone start buying probably the company, and then they've been really, their PEs were some ridiculous and at that point. Now it's coming back to fair value, so it's like right now about 15, but it was trading at one point this year, I think it was trading almost $330, and then it's down since then, is down 40%. So from its size is down now right for about 40%. So it's really interesting little company. Like I said, it's not that big, so it's only about $2.2 billion company. And then beta obviously is quite volatile, PE is quite right at where we want it, and then EPS, this is what shocked me, EPS is $12.68. This is not normal for basically for companies, even the huge company. Like if tech companies, I get it, but other companies, this is not normal. So it's really interesting to see. Then I found out they actually do pay dividend as well. Okay, 3% dividend, so like 5.68 for every share that you own. That's crazy. I was like, oh, this is interesting. So initially I didn't think they paid the dividend. Okay, so I thought, okay, let me dig deep and see in terms of the growth perspective and see where this company is heading. Okay, and when you look at the revenue estimates, you're looking at about 1.52 billion to 1.77 billion. Okay, so from 2021 to 2022 is definitely heading the right directions, which is really good. Okay, and then when you scroll down and keep going to the growth section, you'll realize this year the company is expected to grow 52%, next year 21%, next 5 years about 20%. This is really good. This is more like what I was looking for in terms of a company. And then you look at whether it's basically undervalued or whether it's a buy or hold or whatever, and then you realize it's almost a strong buy. Is heading that direction. So the analysts are saying it should be about $363 per share, and currently it's about $195 per share. And obviously other companies definitely agree with it as well. So Yahoo Finance is saying the same thing. TipRank is also saying the same thing, but they're saying $336 per share. And when you scroll down, there's not many analysts because it's a very small cap, and this is a good thing. Okay, when a lot of analysts are looking at one stock, that means it's very popular. And obviously right now this might be a gem no one else actually knows about, but it's $336 per share. That's a massive upside from where it is right now. So really interesting little company. Now we're going to go back here and we're going to look at their financials. So just always check their financials. So in 300 million to 1.2 billion. So definitely head in the right directions. In terms of gross profit, they're taking quite a bit of that, almost $1 billion home. Then when you look at their net income, okay, $150 million. Not bad at all, okay. Then when you look at their balance sheet, okay, what you will notice is you will see the current assets is 234 million, okay, against when you look at their overall liabilities. So they have enough to cover, okay, their liabilities, which is really good. And that's what you want to see, especially small cap companies like this. They can go down just like that because of if they don't have enough current assets to cover their current liabilities in the next 12 months, something is not working out, then that's the company is going to be in trouble. Then when you look at their cash flow, again, not bad. It's gone up every single year, and this year has actually gone up massively. It's actually down from the last 12 months, so basically a year before, but that's fine. Probably a lot to do with COVID. There might be other things that are playing in part in this. Again, so when you look at their statistics and you go down here, one of the things I've noticed is the PEG ratio, which kind of gives us an idea where the company is overvalued at that point or not, is basically less than 1, which is really what you're looking for. Okay, that's a really good place to be in. Profit margin of 12, almost 12%, not bad. But when you look at the return on equity, 96%, almost 97%. Right, this is crazy. I'm really getting excited as I look at this. But the only thing I will worry about is if we go back to their first page and look at their dividends. Okay, if they're paying you almost $5.68 cents per share. So every share that you own, okay, that's basically what you will get. Now, I don't know if they have enough cash flow there to cover this. Okay, and then when you look at, if you go to simply save dividends, okay, it is 43, which is a borderline. 45, which is a borderline that we look for something 60 plus. Okay, honestly right now I was so excited about the company until I saw this. Now I would have honestly bought this shares of this company even if they didn't have any basically paid dividend. That would have been healthier. That would have been better for the company to keep growing it, and maybe once they get to a position where they feel that, just pay about 1%. I will be happy with that. The type of growth that you're getting with this company, it's fine. Okay, 50%, 21%, double digit basically. That's amazing. Okay, and it's undervalued at the moment. So I will definitely look into this company a bit more detail. Go to their website, have a look at a lot more, go online and see what kind of products. Go to YouTube, watch a couple of, I think I've watched a couple of videos with the CEO. He seems a really nice guy, and basically it seems he cares about the company and so on. So it's really good to know that it's in good hands. But honestly, look into this. I'm definitely going to look into this company because it looks like, especially what's going on in the world right now with obesity and so on, if this company is the leading company out there when it comes to weight loss and the health side of it, then that I'm sure that's going to be like a multi-billion-dollar companies like in no time. Right now it's only 2.something billion dollars, but I can imagine this being, I don't know, 20, 30 in the next probably 10 years. Again, my only concern is the dividend, and I'm going to read about the 10K now and then see how that goes, but I'm not going to bore you with that. So hopefully you've got some value out of this. Maybe it's interesting little company to look at. So I'm definitely going to look into it and see how that goes. I hope you enjoyed the video as usual. If you're enjoying these videos, please share, like, and let me know if you have any questions. I really appreciate your input. It helps me a lot when people, comment and let me know how they feel about certain stocks, or if you own it, if you knew about this company. I only found out about Medifast literally about 3 weeks ago. And I've basically been planning to do a video on this, but I haven't had the chance. So I hope you enjoyed the video. Yeah, take care. Assalamu Alaikum.